Right, let's kick off the first one. Data released over the European session. What's caught your eye this morning?
Well, actually, most of the calendar or cupboard as far as the European data was absolutely bare. No European data to speak of at all. But to be fair, even if there had been, I think it would have been overwhelmed by what's actually going on elsewhere. The first headline here, then, one I'm sure you've been talking about all morning, that China equities or Chinese equities have sold off by a further 8.49%, erasing all of the gains they'd made in 2015. And when you think about the tear that they've been on, I think they're up 28-29%. This year alone. That's quite a significant retracement. That obviously followed on from a sharp sell-off on Wall Street, which was a pretty ugly session. But again, as we said, it's August. People are on holiday. Volumes were relatively thin. European equities, these things reverberate around the world, have fallen again this morning by around 2.5%. Again, adding to last week's losses. And the sell-off has not just been confined to equity markets, however. So crude oil has also suffered once more. So WTI crude, the West Texas Intermediate, the American flavour, has traded down through $39 per barrel, whilst the European-centric contract Brent has traded below $45 per barrel. These are fresh 6.5-year lows for crude, so even beyond the levels that we saw when we got the news from OPEC before Christmas. So worrying times, but again, nothing that we haven't pointed out was potentially possible in the last few weeks.